And the big hope around the ETF, what's really underpinned the big rally in Bitcoin we saw last year and into this year, is this idea that an ETF could bring in a new wave of investors, big institutional investors as well. And it's a similar narrative we heard when Bitcoin futures hit the market a few years ago. But why is this? We didn't really see that materialize in a big way with futures. Is this any different?
Well, the problem with the futures is it resets every month. And so when you look at the fee structure and the rollover, effectively you're paying a very high fee for exposure to Bitcoin. With the spot ETF, you have a number of advantages. One is very low fees. Compared to GBTC, for example, the 2% fee they charge today will now go down substantially if they have to compete with other funds that are charging 20 basis points, 40 basis points, compared to the 200 basis points they're charging. An interesting subtlety that most people don't get is GBTC has to sell about $200 million worth of Bitcoin a year to cover their fee, which now they would not have to do. So there'll be a little bit less supply in the marketplace, which would help the price. But essentially, the ETF really provides access to institutional investors, retirement accounts, the many trillions of dollars that are locked up. Potentially a small little allocation to Bitcoin will happen, and because there's only a finite number of Bitcoin, most Bitcoin is locked up in long-term holders. There's very little liquidity in the Bitcoin market. It's really only about 2 million Bitcoin a day are traded. So we believe the ETF will only be positive.
And Fred, just moving topic to another big event for the industry, and that is the halving, the Bitcoin halving, slated for around April time. This is when the rewards to miners are reduced. You're one of the biggest miners in the world. What does this mean for your business? It's
really all about becoming much more efficient. So our strategy over the past few years has been to energize as much capacity as we can to grow. We did that through an asset-light model where we work with third parties. Now we've shifted more into an optimized business model, which is about continuing to grow but optimizing our cost structure. So we recently did an acquisition, which will be closing here hopefully end of this week, early next week, where we're essentially vertically integrating, lowering our cost structure substantially. And we'll continue to do that over the future here, leading into the halving, consolidating the industry and lowering our cost structure.
And is this going to allow you to be profitable this year then?
Yes. I mean, the goal is always to be at least gross margin profitable. Because we're a public company, you always have certain expenses that can sometimes make it harder to be net income profitable, but certainly from an adjusted EBITDA basis. Yeah.
And with these acquisitions, have you been able to lower the price effectively that Bitcoin needs to be at for your business to be profitable?
Yeah, so if you look at this latest acquisition, the Bitcoin we mine at that site, our cost structure will drop by upwards of 20 to 30% actually because of that.
And so we've got the ETF, we've got the halving. What does this all mean for Bitcoin's price? We've seen a huge rally last year. Is all of this already priced in?
Well, I think definitely part of the ETF is priced in. So, buy the rumor, sell the news. But I think Bitcoin will either follow its historical cycle, which would have it increase in price, achieve the prior all-time high sometime towards the end of this year, and then new all-time highs towards the end of next year. That's if it follows historical patterns. Global liquidity also contributes to Bitcoin price. We're seeing the Fed will be easing, other central banks will be easing, global liquidity will increase likely at the back half of this year. That will also help the narrative around Bitcoin.
So your view is that Bitcoin will hit a new all-time high this year? Have you got any price calls at the moment?
I mean, we estimate just internally that we'll definitely hit the all-time high levels by the end of this year, the prior all-time highs. And then we'll see into next year what happens beyond that.